what would your advice be to these people of like, I make 40 grand a year, I just pumped a $20,000 into some spot ETF trade, whatever that is. But that's not how investing works.
Well, now, do you see the 5X ETFs that got launched yesterday or got filed? This is fucking crazy. I don't know if I can curse on here.
No, you can't. What is it called? 5X?
If you go 5X levered ETFs, so there's ETFs on single names, right? So you can go, there's ETFs that usually are a basket, the S&P 500, NASDAQ 100, et cetera. Recently, over the last 2 or 3 years, people have started to do 2X ETFs, and they position them as trading tools. So they say, hey, listen, you can go 2 times long by just buying this ETF. You don't really need to understand leverage. You just buy the ETF, and let's say you're going into an earnings call or something, and you want some leverage on a single name stock. Well, of course, 2X comes out. They're very popular. Somebody launches 3X. Yesterday, I saw, it's the first time I had ever seen, I don't know if there's been other ones, but this Volatility Shares, they launched 5X levered ETFs. So you can buy a single name ETF that has 5X leverage embedded into it. So you know retail's going to go buy it, right? You get 5X leverage. Of course they're going to buy it. I think we're playing a dangerous game.
Isn't this just sort of similar to sports gambling? I was like, we're going to do a 10-team parlay, and we're going to...
Crypto does it. Crypto offers 50X leverage, right? In some of these exchanges. So again, it's like if what's the saying on Wall Street? Like when the ducks are quacking, feed them. That's what the platforms are doing. Is they're saying, hey, these folks want this stuff, so we're giving it to them. But again, I think that when you start getting into this 5X levered ETF world, right? Like is somebody going to come out with 10X levered? A regulator is going to approve that? What happens when the article comes out in the New York Times or Wall Street Journal about the people who all got blown up, holding a 5X levered thing? There's if you look at do AMD ETF blow up? There was a AMD ETF. I think it was like a 3X or 2X ETF that, here you go. So when OpenAI announced this deal with AMD, obviously the stock price exploded, went up 38%. And the Granite Shares, I think 3X levered fund, I think that's the one, it blew up. Net asset value went to zero. Meaning that if you were holding that ETF, you lost all your money. Because it was a 3X short ETF. So you're basically 3 times leveraged short on a stock that goes up 38% off of an announcement. So like that is a perfect example where I think that people are sitting there and they're saying, hey, I think AMD's overvalued. It's going to go down. Let me put 3X leverage on. Like leverage is a hell of a drug.
Tom, where are you at with this?
Well, there's 2 things here. First of all, there's also gamification and there's things that are happening. And if you go look at Reddit and you look at the Reddit threads on there, and I don't mean just Wall Street Bets and Roaring Kitty and all that goes with that and the meme stocks, you go and look at things like, I've been doing this test so that we can come back with a number scream and do a little segment on it. And what I did was, I read about these guys, Autopilot. What is Autopilot? Autopilot is very simply automated trading based on a formula. So you could go to Autopilot and you could select the Nancy Pelosi portfolio and connect it. So I said, I'm going to do a test. So on July 1st, I took $50,000. I created a simple Robinhood account, basic. And then, Pat, I went to Autopilot, filled out the credentials and said, okay, Autopilot, you can trade the $50,000 in my Robinhood according to the Nancy Pelosi disclosures.
You did this.
I did this. And I am at this is just a little test. So it's just a small test in a real world environment. Right now it's up 18.8%. It's gained 9,500 since July 1st.
Stop it, Tom.
No, I'm not. Just this little 50,000. I did this to do a test because I was reading that in the first 90 days of Autopilot being out there, some 40,000 accounts were created. And these were citizens out there, retail traders that were doing this. And by the way, there's also some very interesting things you can go find out. You can trade World War III portfolio on defense, Jim Simmons.
You can do Jim Simmons?
Yes, you can. And
you
also,
can do Jim Simmons.
You can do
they probably do it off
the
13
inverse
Fs.
Kramer.
You can't do Jim Simmons.
No, what they probably do, I don't know
There's
for sure.
no way you can do Jim Simmons.
No, because what
Jim
they probably do is they probably take the 13F filings from Renaissance and then they just
But
follow.
you're too late if you do that, no?
That's exact. This is
It depends, right?
well, I don't know.
There's no way you can do the Jim.
Well, that's what they're getting for the Pelosi tracker, right?
I get that. I
Well,
understand that.
They show that if you had put money on the Jim Simmons tracker at 74% for
Over
1
what
year,
time period? 1 year?
1 year, 1 year from right now, this summer, this fall, last fall, and it is tracking publicly available information from Jim Simmons' medallion
Jim
fund.
Simmons closed his fund to his customers, told everybody to get out, and they just kept it for themselves. That's how amazing Renaissance Technologies was. Getting a rate of return
65%.
out. Yeah, I mean, it was a ridiculous. Their clients were
13F
getting
filings
30.
by the Renaissance
Remember you
trustee.
talked about him
Their
like 6
clients
months
were
ago,
getting
yeah.
39% rate of return, and they were getting 65% rate of return, give or take. And they said, folks, take your money out. We're not wanting any more new money. We're
Tom,
just
so
going to do
what
some
was,
money.
what was your return on your $50,000?
18%.
I'm at 18%
18%
right
right
now.
Well, here's what I
Just
know,
a-
Tom. Lunch is on you today, bud.
No. I'm doing.
No, what do you mean no?
I'm doing this to show people were doing this with 10 grand, 5 grand, and doing this like this and actually getting
I'm
return.
telling you, Tom, but let me tell you, it's changing. Things are changing. Investment is changing.
That's
you,
the point.
You know what is scary?
And this goes with that
you know
retail
what is
story.
scary about this? You know who should be scared about this? The traditional guys that are working at Morgan Stanley, the traditional guys that are working at Chase's, the traditional guys that are there,
The middle.
where you're like, hey, man, why am I putting, and you're going, well, this is going to give us a good rate of return of 6% annually for the next 10 years. Your money's going to double in 12 years. Excuse me? Yeah, your money's going to, it is going to be a very, very competitive market for those guys. The traditional good financial advisors that come to you and say, we got a great fund for you that can make this kind of money for you.
Can I take it a step further?
Yeah, go for it.
We actually think that those guys are all going to go away for the most part. If you think what a financial advisor does, financial advisor ingests information about your life, synthesizes it, looks into the market as to what's happening both in financial markets and various products, and then gives you back an output. It gives you advice, it gives you recommendations, all this stuff. We have built an AI version of that
This is CFO Sylvia.
that is crushing in terms of not only is it smarter, it's faster, it's free, but what you start to realize is you can do things. So like the whole problem with, if you go to ChatGPT or Perplexity and you start asking it questions, it can give you advice about the financial market. So it could tell you, hey, the stocks are up or down, or this stock here, let me do some analysis. Like it's pretty powerful stuff. But the thing it's always missing is your personal financial information. So it can't give you advice about your portfolio because it doesn't have access to that data. So what we did is we built this AI agent called Sylvia, where you go in and you attach your bank account, your crypto account, your brokerage. You can attach your credit card. You can upload your tax returns. Like you just give it all your information. That data is anonymized and encrypted. My data is in there. I don't want anything to happen to it. And then you can start to ask questions, but you can do crazy things. You could say, hey, run a Monte Carlo simulation on my portfolio and tell me where I'm likely to be in 10 years and do 100,000 simulations. Or let's say that the U.S.-China trade deal happens. Within seconds, you can ask Sylvia, how is this trade deal going to impact my portfolio? And the AI will go and it'll read the entire breakdown of the trade deal. It'll look at your personal portfolio and it'll spit out to you exactly what is likely to happen. And so then you can even start to do things where you can say, hey, go do deep research on Palantir stock. And when you do that deep research, I want you to tell me whether you think that I should buy the stock or not and how I should do it. And so it is going to go and look at not only Palantir, it'll come back and say, here's the pros and cons of Palantir stock, all this stuff. But then it'll look and say, do you have a concentration of tech stocks? Well, your concentration means that you're very correlated to tech. And so maybe you should actually put a smaller position on rather than a larger position to Palantir. And oh, by the way, should I do a one-time purchase or should I dollar cost average into the stock over 6 months? Right? It can start to do all this stuff in a very automated way, and it does it in seconds. And so we actually think that the financial advisors are not going to be the ones who are recommending these products in the future, because just like you're seeing the agentic commerce happen in OpenAI, and I know we're probably going to talk about Walmart and a bunch of this stuff, you're going to start seeing in finance, the AI is the one who's going to start directing people to where they should go. And so Autopilot's a good example. Autopilot is just saying, hey, if you put your money in here, Tom, we're just going to follow the 13Fs or we're going to follow the disclosures from Pelosi, and the AI is essentially going to do it for you.
Of the proxy you select.
Correct. So we think that the Sylvia product is a good example where right now you don't put your assets on the platform. You just connect your data.
This is. So who owns Autopilot, Tom?
It's an independent startup.
2 guys, they're super smart guys. I've talked to them. Very, very smart guys.
How recent did they start it?
I think like
Let's go back and look at the history of it. I think it's
2 years
24
ago.
months.
Yeah, 2 years ago.
How much money have these guys raised?
3 guys.
How much have they raised? Rob, can you say how much money they've raised?
Not a ton.
How much money have these guys raised? Let's see. Autopilot.
Yeah.
$7 million in
They've
funding.
raised $7 million in, and where are they based out of? Are they here, Florida, or are they Silicon Valley?
I forget. Rob, you're excellent Googler.
He's
man.
really good.
LA.
Yeah, you're
Okay.
fast.
LA.
All right. Got it. Interesting. This is the beautiful thing about capitalism and ideas people are going to come up with. Folks, if you want to learn more about CFO Sylvia, go to cfosylvia.com, CFO Sylvia, SILVIA.com to learn more about it. But this is a big, because
This is good. This is the good news side.
This is very good about capitalism. And by the way, this is why we chose to do the podcast once a week. That's around business and money, because we want people to start making more money and have more success for themselves as well. But this is the part about, everybody wanted to go into Jim Simon's Renaissance Technology. By the way, he was one of the first guys ever that used AI, and he did that in the 60s, if I'm not mistaken. Can you type in when Renaissance Technologies got started? It could be late 60s, 70s.
Oh, yeah, they've been doing it a long time.
Yeah, they've been doing it for a long time.
He was a mathematician.
He was a mathematician. Yeah, he was 1982. Okay, but he started earlier. He was a teacher at first, and then he somehow, some way gets into this with Renaissance Technologies, and then it takes off. There's another fellow in the story as well outside of him that there's a Howard Morgan guy. Yes. So what this does is, Tom, so now imagine if you're Renaissance Technology. What do you do now? If a company like this can come and use the way you're making the investment, what is your differentiator?
You like it.
You like it?
Everyone on autopilot's buying after you bought.
So it only validates what you're doing. So a Renaissance
Pushes the stock price higher.
So
in theory,
even-
secondary investors are like
So it
next
even
VCs.
helps Nancy
They're marking up
Pelosi.
your deal.
So it also helps Nancy Pelosi.
Yeah, that's a good way to think about it. You heard what he
Tom,
said?
what did you say? It does what?
He said, well, when a Series C comes up and it's Sequoia, they're marking up my deal if I'm the Series B. They're marking up the valuation and they're putting more validation in with their investment. Now you have the public basically marking up the deal for everybody else that's already in.
So the other thing that's happening in financial markets that I think people are starting to realize is I've talked with a lot of institutional investors, a lot of hedge funds in the last year or so. You have to remember that the young people who are growing up with a phone in their hand, they're on X, they're on Reddit, they're listening to podcasts, etc. They live a dual life. They're an institutional investor when they're at work. They're a retail investor when they're in their personal account. So now what's happening is historically it was the institutions who were leading and retail was trying to chase the trend, right? Institution puts a position on, they go on television, they start talking about it, retail goes and buys it.
We
Well, now-
like Nike.
Correct. Now it's flipping. The retail investors are running into different investment themes because they don't have the constraints. They don't have an investment committee. They don't have, rebalancing and all this stuff. So what they're going to buy, well, the people that are inside the institutions, these young people, they think of themselves as retail investors. They see the trends. They're sitting on Twitter all day. And so then they go and they advocate for those positions inside the institutions.
Within the company, right.
So a good example is Open Door, right? If you look at this Open Door stock, the retail investors all started to buy it. Basically, there's a hedge fund manager in Canada, this guy, Eric Jackson, who comes out and he says, hey, I think this thing is significantly undervalued. It was trading at like 50 cents. And he says, I think that this thing can come back. And so he goes and he buys a position. I interviewed him when he did it. And, I heard the pitch. I thought it was interesting, but I didn't do anything. I'd go buy the stock or whatever. Stock started to move up, and I paying attention. I see all the retail guys, and I see what they're doing. And I say, you know what? I'm going to buy this stock. I'm going to buy the stock. The company at the current moment doesn't look super attractive, but I think the retail guys are going to be able to advocate change inside this company, basically like an activist campaign. So I buy the stock. All of a sudden, the retail guys, they get super loud. Within, 72 hours of them really going hard, the CEO steps down. They get management to eventually agree to stop selling shares. They bring in a new CEO who's the former COO of Shopify. They bring back the founders onto the board of directors, all this stuff. So it's like the most successful activist campaign recently. Well, right after the retail guys all started buying the stock and advocating for all these changes, all the 13Fs start coming out. All the institutions start buying. You see all these guys are buying up this stock. Now, some of it is they think interest rates are going to come down. This is in the residential real estate market, so that would be kind of a tailwind for the company. But a big part of it is they're paying attention to what the retail guys are doing. And so they're sitting there saying, wait a minute, why are all these guys all buying this stock? There's energy now, right? There's momentum. They're advocating change. They're bringing back the founders. They're putting in this great CEO. Like, that is going to change this company. And so the institutions follow retail, which is very different than 10 years ago.
Doesn't that kind of almost sort of validate what Jim Cramer was saying about the tail wagging the dog, not the dog? Because he said basically that volatile crypto trading is sort of insinuating why the capital markets are moving the direction they're going. So is Kramer kind of accurate in
He
that
was looking at
assessment?
liquidity
is,
flows,
but,
I think.
but he's afraid of this pattern. That's way I understood it.
No,
He's
I agree.
worried that
Yeah.
crypto is now the leader, not, that's
Something
Yeah.
important that you said. Something really important that you said. And I can, for people that are listening, I'll take you back to The Big Short, where you have the Asian gentleman that's working with Merrill Lynch, and Mark Baum comes over to his table at the restaurant, as you recall, and he says to him, I have a question for you. And he starts talking about the CDO, collateralized debt obligation, which was nothing more than a big stack of mortgages put in an investment. And he starts describing the synthetic CDO and all of these mechanisms. And Mark Baum asks him, saying, if the CDO market is this big, how big is the insurance market on the CDO? And he says, probably 20x. Remember that scene? Yes. And Baum suddenly realizes, as he says, that the insurance market on the CDO was the nuclear bomb. Now, what you just described, that is how the traditional organizations, Pat, think. And so the people that built the 3X are thinking, we'll just build a 5X. That's the traditional people, the same people that built the synthetic CDOs, that put the insurance on the CDOs. That is Wall Street and the institutions building their products and opportunities. Meanwhile, all these other things are happening for the retail investors through Robinhood, and then through Autopilot, and then through Reddit, and then through Kalshi and the democratization of opinion, that you can look back and say, was it right or is it wrong, and do I like it? I see two different things happening for institutions that are making increasingly bigger bets. We're going to put 1.3 trillion in infrastructure, to quote a current event, and then retail coming. I see it like that. Correct. Do you think I'm nuts?
I think you're dead on. One of the stats, look up a retail percentage of the stock market. I think it's like 38% or something now. That number, I think, is going to go to over 50. Right? If you think about the reason why that's important is because if all of a sudden retail is bigger than the institutions in terms of the trading volume in the market, you have to start to look at what is retail doing? What are they interested in? What are the themes that they are investing behind? And I think that's a big reason why these institutions, right? So like some recent figures placing as high as 36%. And so that is a lot of these apps are starting to give access. But I also think that people drastically underestimate how smart these retail investors can be. So to me, there's still going to be the like gamblers, right? The people who are just speculating in the market. But I think actually there is this kind of middle ground. There's the institutions, there's like retail with like $10 in an account. But there is something, I call them professional retail. There are people who, it's the Google engineer who's got $1 million salary. They're not dumb, but they're also saying, I don't trust the financial advisor, I don't trust the stockbroker, I'm going to go and I'm going to invest in the market directly myself. I have access to information, now I have access to the market via these apps. I'm going to go and I'm going to do it myself. That is a very fast-growing segment of the market.
Let me tell you, disruption at a high level is coming to the space. At a high level. And I remember one time, Tom, you and I went to Armonk, and we're sitting there with Swiss Re, and we're saying we want to introduce a model of underwriting for insurance. And I said, this model is going to get rid of actuaries. And they said, you're going to face a very big problem here because a lot of these guys they're making $250,000, $400,000. A senior actuary, what is a senior 20-year vet actuary making? $400,000, $300,000? It's a pretty good life what they're making. Some of them $500,000. Says I said, look, we can create a way. I want to underwrite somebody in 20 seconds. I don't want to underwrite somebody in 4 weeks. I don't want to wait 2 weeks. Can we do it based on 30 seconds? Can we pull up this data, that data, this? What if we do this? What
Because
if
the data was there.
The data's there.
Your credit report was there. Your driving record was there. Your med check of whether I don't smoke. Really? Then why do you have nick patches on your med check? Is it straight? I can check all of that in 30 seconds, and I have to pay $6 for this, $4 for that, $13 for that.
Do you know what's crazy?
And now I can underwrite that in seconds for about $25.
So check this out. We go and I start proposing that to different underwriters. I start meeting with them. And one of the underwriters I met, but I won't even tell his name, but you know who I'm talking. Maybe you know who I'm talking about. I'm talking to this underwriter in Hawaii. Maybe you know where I'm going with this.
Oh, yeah,
I have an
yeah.
underwriter, this conversation.
Our buddy.
I have a conversation with this underwriter in Hawaii.
2 letters.
Yes. I have a conversation with this guy in Hawaii. And I'm presenting this thing to him. Oh, this will never happen. I said, is it because you're going to be replaced? Is it because those jobs of the old school? Well, no, I mean, you're still going to need us. I said, I don't think so. I said, you probably have a safe job for 5 or 10 years. I said, buddy, your job's going to be extinct very soon. This whole concept of the AI thing that's coming and what these younger guys are building, and by the way, that was one of the reasons why I wasn't interested in staying in insurance for 20 years. I was like, if I'm fighting this, it's going to be too slow. We're going to go a completely different route. And then we sold off. And the speed was my biggest thing. It's too slow. Let's go is what it was.
And Pomp, you'll love this. CVC, Corporate Venture Capital.
Yep.
Swiss Re, one of the reinsurance companies,
Yep.
and reinsurance companies hide in Bermuda, some of the largest stacks of money on earth. They had one guy in a basement office that we went to speak to about innovation. Remember that guy? He was nice. Remember this, Pat? One guy who had an office literally in the basement in the old section that didn't have this grand artwork and all this redone. And we're like, you guys should be all over CVC and investments.
I saw this in real time in a different sector. There's a company called Figure Technologies that we invested in. And at the time, they started getting into HELOCs, home equity lines of credit. And historically, HELOCs, I forget all the data, but it takes like 45, 60 days. You got to send in physical paperwork, right? You got to fill it out. You got to send your pay stub. You got to get an employment letter, all this crazy stuff.
For a guy with a job living in a house he owns.
Correct. So what they did is, and to kind of paraphrase, is they basically said, you can come here. You basically use Plaid to auth this into your bank account. You fill out, a quick form. Within 5 minutes, they tell you whether you're going to get the HELOC or not, and they send you the money within 5 days. They became like the second or third largest HELOC originator in the United States. And a huge reason was like, why do you have to send in your W-2? If they could just see in your bank account, you keep getting a direct deposit every 2 weeks. What is the amount of money? So it sounds very similar to what you're talking about. Is like if the med check, I think you called it.
Yeah.
If you know that they've got nicotine patches, like they
I'm assuming you're either smoking or trying to quit.
So I just think like this whole like data business or this like automatic underwriting, automatic analysis is going to become very, very big as people realize that now the data doesn't only exist, but also there have been companies that have popped up that have become the connectivity. So it makes it very simple for developers to be able to go and do it. Plaid's a great example for banks. There's many others like this. And so I think you're going to continue to see this over and over again.
It doesn't just come down to efficiency and cutting out the middleman and all the red tape and deregulation. Is that just efficiency? That's what it is?
If you're not, so one of the things that, and I already know that I'm preaching to the choir here with the kind of entrepreneurship, but like if you think of what entrepreneur is a problem solver.
Right.
So if you're trying to offer something in the marketplace and somebody says to you, hey, you can have a 60-day process, you got to do all these paperwork, all this crazy stuff, or you can go on a website, you can click buttons and I'll tell you in 5 minutes whether you're going to get it or not, where are people going to go? Obviously. So whether it's insurance, whether it's HELOCs, whether it's, whatever sector, like that is where the world is going. And I think that entrepreneurs are just trying to figure out where's their inefficiency that we can cut out.
On Monday, I introduced you to the FLBs, the FLB1 shoes, Future Looks Bright shoes. And let me tell you what happened since that day. For black shoes that we had, I'll give you the report here. For black size, Rob, I think you have it as well. Size 8 and 11.5 sold out. If you place the order now, it's pre-order. It'll get here second week of December. For brown, 8, 12, and 13 sold out. Navy, size 13, sold out. Everything you order on those sizes will be pre-order. I shared with you the fact that a lot of the sizes are going to sell out. A lot of them, there's only 4 or 5 or 6 remaining for the shoe sizes. So for some of you that didn't see what we talked about on Monday, for the last 25 years, I speak a lot on stage. And some of the events, whether it's my insurance company or the Vol Conference or BPW, at some events I can speak 40 hours where I'm on my just standing up talking and I'm wearing dress shoes and they're uncomfortable. I wanted to find a shoe that can combine both the comfort and the technology and the authentic Italian leather, the trainers, because I love those shoes. I didn't want it to be too heavy where I'm feeling like I'm carrying weight. We went to Italy. We put a shoe together called the FLBs. And I want to show you this clip one more time. And then I'm going to show you one other clip. And then we'll give you some intel and then we'll get right into the stories. Go ahead and Rob, play this clip, please. When we set out to create a shoe that blends comfort, function, and luxury, we had the choice to make it fast. We had the choice to make it cheap. We chose neither. Instead, we chose Tuscany, Italy. We chose true Italian craftsmanship, each pair touched by 50 skilled hands. We chose patience, spending 2 years perfecting every detail, and we chose the finest quality at every step. Introducing the Future Looks Bright collection. Not rushed, not disposable, not ordinary. Rather, intentional, luxurious, timeless. So just so you know, if you're wondering, Pomp came in here, he saw all the shoes, and he kind of goes like this. He's like,
I looked under the table.
He's auditing me. He's like, let me see if this guy's a product of the product. 24 days in a row I've been wearing this, just so you know that. 24 days in a row I've been wearing this. No matter where I go, last night I was at Casa D'Angelo, I was wearing this. The most comfortable trainer shoes with the Italian leather. And again, if you haven't placed the order for yourself or your spouse, this was us at the Vol Conference. Rob, if you want to play this clip, the launch of it when we did it here was so exciting. People were coming from all over the world. That was a 10-foot shoe that we put up. But guys coming back, how comfortable it is, how light it is, feeling the super foam at the bottom of it, taking pictures of it, sitting in boardrooms with your feet up where somebody says, wait a minute, does that say Future Looks Bright on the bottom of the shoe? Yes, let's make a deal happen, right? There's a certain sense of optimism when you're wearing these Future Looks Bright shoes. So again, the black and brown, if you order them, we have them now. If they're sold at pre-order, because you'll get it second week of December. The white, when it comes out, it will not last because, you know, there's a certain material that we mixed it with. The white is absolutely ridiculous. This will come out second week of December with the navy blue. The navy blue and the white will come second week of December. The black and the brown are here for you to order, depending on your size. So go to vtmerch.com, place your order, and you can learn more about the comparison of how these shoes compare to a Tom Ford. Rob, if you can go a little bit lower, to a Gucci, to a Berluti, to a Ferragamo, to a Xenia. Make the comparison for yourself. Instead of spending $950, $1198, $95, $840, it's built in the same exact factories as Gucci, Louis Vuitton, same ones, $599. I just put them on this morning. It took me half a second to put them on, and driver came, picked me up, got in the car, came over here. So if you haven't placed the order yet for yourself or somebody else, place the order, go to vtmerch.com. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.